I think the biggest struggle in the property management business is clear communication consistently. So you end up paying them for 8 hours of work when a job actually took them 3 hours.
I don't know if a lot of people realize that type of savings would be available, just stringing the jobs together like that.
Submitted a permit for application last week, and our architect just sent me something last night that I've never seen before. But I have to hire somebody who I don't even know yet, and you could be looking at 2.5 to 3 months to get your permit approved. Well, it's all about trying to do as much as possible with as little as possible while still maintaining an acceptable level of good communication with the residents. So it's a hard line to perfect.
We have Michael Root joining me here today. You can learn what his team is up to. Head over to RootPG.com. I really appreciate your time here today, Michael.
Hey, thanks, Jack.
So we're going to kind of keep this one a bit on the shorter side. I was hoping you could start with a brief, very brief, how you got your way into real estate investing and what your team does today.
My parents joined their office, my dad's office, really in 2005, right after I finished school. Learned a lot about property management, doing leasing, property managing his buildings that he had in the Lakeview and Lincoln Park neighborhoods in Chicago. And from there, got more interested in investing and doing our own deals. And that's sort of been the focus since 2006, I'd say. And with that has come growth of property management business, operations, maintenance teams, general contracting business, all of the things to try to keep as much of it in-house as possible. So I spent a lot of my time today doing general contracting, underwriting, potential apartment deals, and working with the property management team to solve more complex issues that come up.
So with all of those moving parts, what has been your biggest lesson learned?
I think the biggest struggle in the property management business is clear communication consistently. That's normally where a lot of the headaches arise from the residents. So just trying to fine tune that over the years has been my biggest challenge. On the flip side, renovating apartments and seeing the finished product after you're done doing all the work to it is my favorite part job.
In many situations, I see that the property manager and the property owner, sometimes their interests aren't aligned. I see more and more people bringing their property management in-house to make sure everything is in alignment like that. Is that one of the reasons you did it?
We started off with fee management pretty much exclusively until my brother and I bought our first building in 2006. And even then I was still interested in third party management, and I still am today. It's a good business. But like the properties that we own here today we're PG's biggest client theoretically. But I would say that, people who have 10, 15 units, it's too much work to do part-time. And it's not enough work to say, I'm going to start my own property management business. So I don't know what the threshold is, but I imagine it's somewhere around 100 units, something like that.
Right. So could you talk a little bit about what you acquired today then? It sounds like you brought up being a contractor. So I would imagine, are you looking for multifamily distressed properties to do some forced appreciation?
It's all multifamily and some ground up development. The reason I got into the general contracting was we started forming really good relationships with handymen and plumbers and electricians who were kind of one-off type people that didn't have the proper insurance or anything like that. So we started our general contracting company to be able to provide that coverage and kind of elevate it to a more professional type of business. But I would say the reason, aside from that, the other reasoning is I'm just able to control cost and schedule so much better when people are working directly for us and not as like a subcontractor or 1099 person.
So how are you finding those savings?
Yeah. I mean, now I pay people by the day at like an hourly rate. When you hire someone, they're going to say, well, this job's going to take me half a day and I need to get paid for a whole day because I'm probably not going to go to another job after that. So you end up paying them for 8 hours of work when a job actually took them 3 hours. So now I can do 3 hours of work at that hourly rate and then send them somewhere else and then do three things instead of one.
Oh, that's a good tip. I don't know if a lot of people realize that type of savings would be available, just stringing the jobs together like that.
Yeah. for sure.
So could you talk a little bit about what you're seeing in your market, like trends, anything going on?
Yeah, it feels like a lot of products has come on the market in 2025. I still think a lot of it is priced pretty high, and we've taken stabs, made offers on, a dozen properties probably in 2025, and we've won 3 of those. Normally we want that to be a little bit higher, but people are just paying numbers that we don't see make sense right now. And so there's definitely a difference still between what the seller is expecting and what, more conservative buyers are expecting.
Hmm. So what are your primary targets then? Are you targeting 100 plus units yourself?
No, we're in the mid-market space. Some of the deals that we're working on right now is a 9-unit in Lakeview. That's a total value add, pretty close to gut that. And that's definitely on the smaller side. We've got another one down the block from that. That's 12 units. And the big project that we have going on right now is a ground up development, just under 60 units.
So how do you select these ones that you go for? You mentioned the 9-unit, these are smaller facilities, but are you being very selective regarding like the neighborhoods? Maybe there's some development going on around it. Like, how are you selecting those target markets within your march?
The 2 small ones that I mentioned are in a great block, in a great neighborhood on the north side of Chicago. And we have a lot of units within blocks of those 2 properties. And so we just know the market extremely well there. And we think that we're getting in at a price where I can renovate them and still be at a very conservative per unit all-in cost and hit the target rents that we want. Another reason is it's a way of keeping our crews busy while we're waiting for some of these bigger projects to get permits. So it's a way to keep people busy.
Yeah, you mentioned you're in Chicago, so I would imagine there's quite a lot of paperwork associated with some red tape you have to deal with.
Submitted a permit for application last week, and our architect just sent me something last night that I've never seen before, but I have to hire somebody who I don't even know. And I just started looking into it today, but it's a new form that we have to fill out and had some testing done and then submit with the building permit application. So yeah, it's just continually changing.
Well, you chuckled a little bit on that, so I must hit a soft spot on like is this happen pretty frequently in Chicago?
Yeah. I mean, there's definitely red tape. The process is kind of slow, and that's what's fun. Like if you submit a permit net for the city of Chicago, like right now, you could be looking at 2.5 to 3 months to get your permit approved. But then we have a property just north of the city in a neighborhood called Lincolnwood, and I had to do some permitting there for that commercial property. And I called to find out what the process was, and the person that answered the phone was the person that like approves the permits, and he told me exactly what I needed, and he got it back to you within like 72 hours. So it's a much smaller market than Chicago, but the efficiencies of the little village offices are abundantly clear.
Well, I'm sure that the smaller places too, they probably appreciate a developer coming in, revitalizing a building or what have you. It's just tax dollars and a better experience for their community.
And they answer the phone.
And they answer the phone. I'm curious, how are you leveraging technology in your world and what you're doing today?
Well, we have a lot of technology. Something that I try to do every year is bring in one new piece of technology, because I feel like if you miss a couple different new technology trends, jumping to the third one is going to be too big of a learning curve. So you just got to try to stay consistent and bring in the new technology. So I go to a lot of real estate conferences over the course of the year. A lot of them are technology driven, are my favorite ones. But I just go talk to as many people as I can, see quick demos as much as I can. But it's all about trying to do as much as possible with as little as possible while still maintaining an acceptable level of good communication with the residents. So it's a hard line to perfect.
Yeah, I listened to Alex Hormozy recently talk about this, and they've even calculated now anytime that they make any significant change, it can impact, at least temporarily, their productivity in that department by 20%. So you got to be ready for that type of impact and cost when you're implementing something new.
And that's a scary thing about technology and implementing it new to your processes is sometimes I'll be ready to go and then I'll pull back and say, I don't want to do the kickoff date yet because of X, Y, and Z. We've got too much going on right now. We're not going to be able to get enough our plate. So bringing in new technology in Chicago in May and June is not the best idea because this is one of our busiest times of year with move-in, move-outs, turnovers.
Yeah, I suppose our markets are similar when it comes to weather conditions anyway. Like, I have the same situation. You have this brief spring, summer, fall, and then, nobody's moving in the den of winter.
No, especially not in Minnesota.
Yeah, exactly. So what is your buy box now, like that you've established? It sounds like you kind of target it's almost like you're filling your pipeline with your contractors, but maybe I'm mistaken.
Our buy boxes are $1 to $5 million quick flip multifamily deals in core north side neighborhoods that we can do with keeping our own crews busy. And then we have ground up development in good core or near core markets in Chicago that we would likely have some type of partner on. And then there's the large multifamily, which is 60 units plus that can be north side Chicago, north suburb, west suburb Chicago. Those would be much larger projects and we're raising quite a bit of capital for them.
Mm-hmm. Just to remind everybody, we're talking to Michael Root and you can learn what his team is up to. Go to rootpg.com. I'm going to have that as a clickable link in the show notes if you found some value in what we're talking about. So could you talk a little bit about the value add that your team does, like in the forced appreciation? Is there any particular low-hanging fruits that you target?
Yeah, I think there's two different types of value add. There's the units that are just in such bad condition, you have no choice but to do a lot of the work and spend north of 25, 30 grand in those units. In those situations, like you have to do that work because you can't do just bare minimum because you're still going to be left with a pretty messed up unit. So that's what I call heavy value add. And that is something like the one, the 9 unit that I mentioned. That's what that build project will be. And then the other one I mentioned will be more light value add, where it's a clean unit. It's a well-maintained building in a good neighborhood, but the rents are low and the kitchens haven't been fixed since 1990 or 2000. And they're just out of style. So those are refinishing of floors, new LVT, kitchen cabinets, appliances, tile in the bathroom, light fixtures, plumbing fixtures, maybe replacing of HVAC system if it's there. And, we can do those jobs in 2.5, 3 weeks. And those are kind of my favorite, finding those properties. Just because we know if we do this work, we can raise the rent from X amount to X amount. Because we've done it over and over and over again and just know pretty well what the product will be like after that work is done.
It's one of those things that we kind of do as well, but for single family homes. And you have your book of business, right? This is our SOP. This is the paint you use. This is the countertops you use. We do the same thing over and over again. However, one of the things that we've noticed is that you get used to the same routine. Is there anything that happens where you get a spot check and it's like, okay, we need to change that material or change that style or do something else? We've had a tendency of sticking with something maybe a little too long.
Yeah. I'm having that challenge with myself right now with white kitchen cabinets and even shaker style. There's a new modern shaker style cabinet that looks pretty good. So I kind of want to start moving to those, and we buy a lot of material in bulk. And 25,000 square feet of LVT flooring that I got in the beginning of the year, and that we've got about 5,000 square feet left. I have been asking people in my office, what do you think of all the LVT that I bought? If I place another order for this, will I get the same one or do we want to change it up a little bit? Because it's so much flooring that you want to make sure that you're still happy with it.
Right.
I haven't made the decision on that one yet.
Yeah. So what's your biggest market challenges right now? It sounds like the prices of these properties are just a little still too high.
getting deals to pencil out. I think our biggest challenge is the property taxes in Cook County can be hit or miss, and we've underwrote acquisitions with the property tax doubling from where it currently is, and then that has turned true in year 2 or 3 of ownership. And then we've done the same thing on other buildings, and the reassessment came out, and they've gone up 20%, which is a good surprise, not doubling. So I feel like I need to write that 15 to 18% of gross pro forma rent is what I think the property tax bill will be eventually. And because of that, it hurts the value of the property a lot, might not make me as competitive as some of the other people I'm bidding against. So that's definitely the biggest challenge in making deals. So,
No, so Cook County, it sounds like one of those that gets reassessed as soon as it changes hands. Now that's the value of the property.
it will if the value changes, but the reassessment is every 3 years.
Okay.
We rarely have something less than 3 years.
Yeah. There's just some counties in my world, it gets a reassessment as soon as the property changes hands, and they will jump all over it as soon as they saw and it sold for a higher price. Well, this has just been a very interesting conversation. We're going to jump into the rapid fire questions and close out this episode. But before we do, is there anything we should have hit on up until this point?
No, I think Chicago was a great market. I love what I do. If anyone's ever interested in hearing about our business, feel free to reach out to me on our website. You can find my email there, and happy to have a conversation with you one-on-one. Just talk shop.
Yeah, I would imagine there's quite a few people that are just kind of much like I hear California, New York, Chicago's in that group of difficult areas to work in. And you really need to know what you're doing and be comfortable with some of that.
Mm.
Well, if you're ready, Michael, we'll just jump in and close out this episode.
Jack.
What lie do real estate investors often tell themselves?
That the expenses are going to be less than what the OM says.
If you could go back in time and give your younger self a piece of advice, what would it be?
I should have networked more.
Do you have a book recommendation?
I'm reading a autobiography about Carl Icahn, and also I'm reading Homes and Dove.
Okay. And then finally, what single process or tool have you implemented that has had the biggest time-saving impact?
For lease scheduling, for lease tool.
Well, Michael, I really appreciate this. One last time, you can find more information by going to rootpg.com. But really appreciate your time today. This was great.
It was nice talking with you, Jack.